Choosing the wrong retirement account today could cost you over $100,000 in taxes over your lifetime. That's not just theory, it's math. So if you're unsure whether to go with a Roth IRA or a 401k in 2025, you're in the right place. Let me show you exactly how to make the best choice and avoid the costliest mistake of your financial life. Let's start with the Roth IRA. A Roth IRA is a retirement account you fund with after-tax money, meaning you pay taxes now, but your investments grow tax-free and you withdraw in retirement tax-free. 2025 contribution limit is $7,000 or $8,000 if you're over 50. Income eligibility. If you make over $161,000 as a single filer or $240,000 married filing jointly, your ability to contribute starts to phase out no required minimum distributions, RMDs, and you can withdraw contributions anytime. But here's what most people forget. Roth IRAs give you lifetime tax-free growth. That's like planting a tree and never having to share the fruit with the IRS. Ever. Now, let's talk about the 401k. This is a pre-tax retirement account offered by employers. You contribute from your paycheck before taxes, lowering your taxable income today. 2025 contribution limit is $23,000 or $30,000 if you're over 50. Employers often match part of your contributions. That's free money. You'll pay income tax on withdrawals in retirement, RMDs, start at age 73. This is where people lose the most money, by not taking full advantage of the employer match. It's like turning down free cash. Here's the real showdown. Tax timing. Roth, pay tax now, tax-free later. 401k, tax break now, taxed later. Income limits. Roth IRA has them, 401k doesn't. Withdrawal rules. Roth is more flexible, no RMDs and access to contributions anytime. Contribution limits. Roth is lower, 401k allows much more. Think of it like choosing when to pay for a vacation. Roth is like paying up front and enjoying it stress-free. 401k is like booking on credit. You'll pay later, but maybe at a higher cost. Use a 401k if you have an employer match. Always grab that first. You're in a high-income bracket now and expect lower taxes in retirement. You want to save big, 23k plus each year. Use a Roth IRA if you're early in your career and in a low tax bracket. You want flexibility without RMDs. You value long-term tax-free growth. Here's the part most people miss. The best strategy often isn't either or, it's both. Here's a powerful combo. Contribute enough to your 401k to get the full match. Then fund your Roth IRA. If you still have money left, go back and max out the 401k. This lets you balance tax flexibility, growth, and risk management. Future tax rates are uncertain, so this gives you more options later. Let's run a quick example. Say you invest $6,500 a year for 30 years with an average 8% return. Roth IRA. You contribute post-tax, so withdrawals are tax-free. You end up with $740,000, all yours. 401k. Same growth, but withdrawals are taxed. If you're in a 25% bracket, you keep only $555,000. That's $185,000 difference, just from choosing the wrong tax strategy. Myths and traps. I'm too young to think about retirement. Wrong. Roth IRA benefits compound massively the earlier you start. I'll be in a lower tax bracket when I retire. Not guaranteed. You might actually be in a higher bracket if tax laws change or your investments do well. I should wait until I make more money. Even $100 a month now can snowball into 6 figures by retirement. You're about to learn the most overlooked factor in retirement planning: time. The earlier you start, the less you have to save later. So, Roth IRA or 401k? The truth is, the best one is the one that fits your tax situation in 2025 and your long-term goals. Use the Roth for tax-free growth. Use the 401k for high limits and employer match. Use both to build a bulletproof retirement. If you're serious about keeping more of your retirement money, I've linked a free Roth versus 401k calculator in the description. Run your numbers. And don't forget to subscribe. because next week's video breaks down the best accounts to retire tax-free. You don't want to miss it.